I'm just gonna invite everyone here on the Discord. Announcements. Okay. Let's okay, so we're recording. Hey, welcome. What's up, man? Hey, man, how are you doing, man? You can hear me?
Hey, yes, sir.
Hey, perfect. Let's see. Oh, there we go. Okay. Okay, we got only you so far, but that's okay. I'm just gonna wait. Wait, you're here Brian Hacks, right? That's you?
Yeah, that's it.
Perfect. Okay. Well, you say you traded Forex? How long have you been trading Forex for, man?
About 14 months now.
Oh, yeah, you're profitable?
Yes. I was
Oh, yeah.
profitable since like August
Wow.
last
Well,
year.
how much? That's good. What pairs are you trading?
Like I was mostly I was mostly following Euro USD.
Mm-hmm.
Lately been trading mostly gold, but the
Gold.
strategy that the main strategy that I follow, it applies to all of them. So like if I'll get a setup on any pair, I would take it.
Right,
But
right.
right now I'm not getting a lot of setups, so
Yeah, market's been I'm just trading GJ. I mean, I'm using Owanda, but like I know it's a shitty regulated broker. Like I'm just trying to like I'm just kind of playing around, you know. But like I'm gonna probably go to I think Hugo's way and then just do go on like MT4, just trade. I'm using like a trading view platform, which sucks, but okay.
oh yeah.
Mhm.
The first broker I started with was Owanda, and my experience with them was not great.
Oh,
So
really? Yeah, I mean, listen, like they execute fine, and like they have like I'm not using ECN. I miss not ECN. Sorry, I'm not using like the raw spreads. I'm just using like like I'm not paying any commission. Like I'm just using like 2.0 spreads. Like I mean, it's not that bad. Like it's kind of high, but it's not like the worst thing it could be. You know what I mean?
like 2 pips.
Yeah, 2 pips.
Spread.
Like it's like what I do GJ. It's like 2.2, 2.3. Like it's like 2.5 maybe. It's kind of bad, but like it's like I'm paying commission. I'm only paying the spread.
Okay, I wonder what's for okay, for GJ with my broker right now is 1.1 pips.
Really? Who's your broker? You said?
I use okay, now it's at 1.4. Anyway, it's hovering around there.
That's
It's
good. That's good.
Fusion Markets.
Fusion markets, huh? Okay, I got you. I just use like trading view to chart, and then I do like empty fourth
Dude,
executions, like on the phone. You know what I mean?
everyone does that. I swear, all the
Dude,
good
fuck
people,
MT4, bro. Like, MT4 sucks.
all the profitable people do trading view on the computer and then execute from phone, from what
Exactly,
I've
bro. That's
heard.
how you have to do it though, because trading view is the best platform to chart on, and MT4 is ass, and everyone knows that.
Like on the computer, I use MT4
On the phone,
yeah.
yeah, everyone does
Yeah.
that. What do you want? That's how I do. I'm like, bro, no way, dude. I try using MT4 on the desktop, and I'm like, nah, it's just not.
Yeah.
But anyways, I mean, yeah, so this video is probably not going to be like, it's good to chat with you. I'm happy that you came, but it's probably not going to be like new information to you. Like, I mean, maybe you'll be like, oh, let's see this strategy. Let's see if it's like viable. But like,
Dude, yeah, I know. Like, it's. I mean, everyone has their like own style, but it's always good
right,
to
right, of
hear
course. I
more
used
people's
I'll tell
styles.
you what, obviously Roger, right? You know the Wix don't lie shit.
Which one?
Wix don't lie.
Which style?
But I don't use a
I've heard of
strategy.
it. Wait, I've
I don't
heard
use a
of.
strategy. I'm just saying, you know
Wait,
who that is.
I've heard of it.
The guy who does the New York live streams every morning. He goes like he has like 4,000
Oh yeah. A friend told
Indian
me about
guy.
it. I haven't actually watched him though.
Oh, really? Yeah, no, I stopped using him, but like I used like his strat because listen, he's profitable, he doesn't know what he's doing. Like he knows what he's doing. So I used a variation of his with ICT.
I started his mentorship program today.
Dude, ICT has some very interesting stuff. Like I adopt like his stuff as well as his. So like I use like support resistance and I use like the crowd mentality and then I go against it. Like I trade against like it's like all psychology, bro. It's fucking crazy.
That's what I'm
But it
doing.
works.
Practicing now on a demo account. I'm just gonna aim to double it currently. Okay, what's my current status on the demo account? It's currently currently up 17.5%, so not bad. But what I'm doing is risking 5% per trade.
That's
And
crazy. I'm only risking 1%, dude.
no, that's for a demo account. So
Oh, the demo. Yeah,
yeah,
yeah, yeah.
yeah, yeah.
Sure.
So for a
Yeah.
demo account, I'm doing 5% per trade. Uh,
Mhm.
and it's basically looking for setups where price looks is gonna go one way, and then just do the opposite and do like either between like 1 to 1 or one
Yeah.
1 to 2 within that range.
Oh, so you're making like 10%. That's crazy.
Some like one of them, yeah, I made like 11%.
Wow,
But
that's insane, bro. It's crazy gains. I wonder why no
uh,
one's joining. Elliot told me that Elliot told me he's joining. The room's live. I don't know why he's not. I mean, it's recording, so I can just go over it. But like, I would want people to join that don't know, because like you already know. Like, I'm just talking. This room is basically like for people that are coming from the stock market, because I'm in a larger group that does stocks. Okay,
oh,
so
okay.
we're bringing in people from there. So it would basically be explaining to them like like why did like PDT rule, like using leverage, like the basics, like why you should do Forex basically, like. But
I
I
mean,
just wanted to go over that, but nobody's in this chat. I mean,
because the thing
I
is,
do more
yeah,
videos, like I do live streams and like all that shit.
like,
Oh,
because you from the US?
yeah, I'm in the US right now.
So I'm guessing you use Ameritrade
No, I use right now Wanda, bro.
for like stocks.
Oh, I'm using no, I don't even trade stocks, bro. I don't trade stocks at all. I have investment portfolio, but that's with Robinhood.
Oh, okay, okay. Actually, I'm actually at work now, just getting a phone call from a customer. I'll be back
Oh, that's fine
as soon
for
as I
sure.
can.
No
Uh,
problem, man. Okay, so I guess nobody is here so far except for him. So okay, I'm just gonna go over the things I wanted to go over. Oh, can we see me? Okay, yeah, there we go. Okay. How do I make this small? I don't even know. Okay. Let's just put this here. I hope I'm not bothering him. I hope I'm not. In any case, let's just go over here. Let's just go over here the PowerPoint. So basically, here, I'll put this here. So we're basically talking about stocks to Forex integration. It's just basically like like I said earlier, if you're coming from the stock market and you want to look into Forex, like what is Forex basically and how does it work? So I'm actually not going to be covering everything because I already have done that in one of the first classes that I did. It's in the masterclass archives. It's called Forex here. I posted it here. Forex Introduction Basics. It's already been posted there. So there's no reason for me to actually go over all the information again because it's just already perfectly laid out and I spent a lot of time into that video and into that segmentation of each like individual slide of information. Like I really put in the effort. So I really don't think that I should go over all of that again. But I will go over what you need to know in terms of coming from a different market and what to expect from this one. So yeah, let's just start with some basic questions that is laid out here. What is Forex? What does it stand for? Like, what is it? Like, what is that? Forex is foreign exchange. It's just the exchange of currencies against one another. You're basically betting that one country's economy will outperform a different ones. For example, the most traded commodity in the world right now is Euro USD. Okay, has the lowest spreads. It's the most liquid pair in any market and it's just a pretty good pair overall. And what that means is that you're betting that the euro will either go up or down in value against the dollar. So let's say you have good euro news. Euro news is like I don't know, the coronavirus has been abolished from the entire European continent, okay, which is great news. And they're the first continent to do that. So the euro would go up and then the dollar would be going like down, it would be going up in value against the dollar. But and then the inverse, if the US dollar would be going up, right, in value, like the dollar index would be going up, then the euro dollar would be going down. Because in the same sense, if the dollar is gaining strength against the euro, then euro USD, because euro is the base currency and dollar is the quote currency. So the base is always against the quote. So quote goes down, it goes up. And then the quote goes up, then it goes down, like the base. And then opposite. If the base goes up, then quote goes down. And then no, if the base goes up, then the base goes up, then the quote goes up, and then opposite. It's like kind of annoying to figure out, but that's how it works. Like if the base is going up, then everything goes up, and then if it's going down, then it's also going down, and then vice versa. Like if it's going down, then it goes up, like on the dollar, and then if the dollar goes up, then it goes down. So that's how you need to understand it. So that's how that works. Get some water here. Hot here in Miami. I'm sure you guys know. So yeah, that's basically what that is. It's yeah, which leads you to the next question. When can I trade? Forex works 24 hours, although today it closes at 5 p.m. Eastern Standard Time because it closes on the weekends and the market closes at 5. But yeah, that's basically a 24-hour thing. It's you have the Asian session, the London session, and then you have the New York session, and there's overlaps between all three sessions. And the most volatile like areas of the market is between the London and New York session, which is basically good from 8 to 12 is when the market's really really moving there. I personally trade from 6:30 to 12 because that's just when like you have pre-New York because New York opens at 8. And like I said, guys, if you guys want to see more about like if you guys really want the more introduction basics, then I really recommend for you to watch the masterclass that I posted in the archives in the Discord. It's free. You can go watch it. It's a 43-minute video. It's not too long, and I really do explain everything. Like I said, I'm just going over like the basics is for people who want to get familiarized with Forex. Is it worth it? Well, that depends on what you're looking for. If you're looking for day trades, okay, in a easy market to understand, then yeah, it is worth it. It like you can be making like not every day because you're not gonna be winning every single day, but you could be winning 1-2% a day. Also, Nikolai here can tell you the same thing.
I mean, it definitely to be profitable, like intraday trading definitely will take a lot of time. I'll definitely first start with do like larger time frame trades. So, the trades that could take a week or two to close.
Yeah, but I don't want to be paying swap fees. I only do like intraday.
Okay, yeah, but you can do like, but definitely do on a demo account first. I like.
Oh, for sure. No, I'm not saying go
Yeah.
right ahead and start it from this video, obviously.
I mean that definitely if you want to do intraday, what I like often, like you said, during the New York session, when New York session opens at 8 a.m., that's normally when the big moves start to happen.
Right.
Right. So like if there's some setups, like you could get some good setups with like a good risk to reward ratio. Because if you're right on where that move is gonna go, like you can make a good amount of profit there. And
For sure. Especially if you're holding, then it doesn't matter about the swap fee. But like it depends on the kind of style you are. It could reverse on you in a second. You know how Forex works. Like I'm so scared to hold for days. I'm so like you could also be massively wrong and lose like a ton.
Yeah. I mean,
So you have to be careful with that. But that depends on the type of you can scalp, you can do swing trades, you can do everything on Forex. Like it's not that it's limited to just day trading. Just the swap fees are kind of annoying because like you just have to be paying on the thing is options. If you're holding an option for 2 weeks, you have to pay premiums, you have to pay you have to take stated decay. I don't know if you know anything about that, but because I studied stocks too. Stated decay on the option, right? Because you guys are coming from the stock world. So what does that mean? Every day that passes, you lose a certain amount on your option. So if the option doesn't reach your strike price by the determined price, by a certain date, sorry, then you're actually losing a lot of money in addition to the premium that you're already paying. So it's not as complicated and risky as options in that sense. Like you're just paying a swap fee, which means after the market closes, you're paying like a certain percentage of the position that you have open to your broker, which is nothing you can do about it.
I believe, isn't it, if you hold a position for when the new day starts, that'll be 5 I believe it's 5 p.m.
Yeah, after
You,
5 p.m., any position that you had before is being you have a swap fee on it. Yeah,
sometimes though you could get
interest.
it could be in your favor
Yes,
sometimes.
that's something that's kind of advanced, but I guess I could talk about it. Some
But
certain
even
pairs,
then, yeah, even then, you're not really gonna be making anything because what
it's like
if it's in your favor?
0.25%
It's
interest.
yeah, if it's in your favor, it's gonna be like very minimal. But
I mean,
honestly,
listen, you're not
yeah,
losing money though. Like you're not losing money actively.
yeah,
You're
that's true.
making money for holding it. But also depends, but that changes because the banks like sometimes they think they go against your trade and then they give you interest on it because they think it's gonna go against you. So it's like you have to kind of be careful with that. Like, I don't really trust that shit, bro. Like I don't really care about the swap fees. Like it's not something that's gonna matter to me if I'm swinging. You know what I mean?
Yeah, I mean,
It's
for
just
me,
kind of annoying.
yeah,
Just an annoying thing to have to deal with. I
I
mean,
find
listen, you
there's
can scalp though in a
yeah,
15, 30 minute, like 1 hour, like you can do that in a day.
yeah.
Swing and make like catch like 100 pips. It's not bad. A day.
Yeah, I find for the swap fees I find are like very, very, very small, but
Yeah, they're
like,
small.
but it's still kind of yeah, it's still I can see definitely see how it can be uncomfortable for some people just knowing that you're paying that
This low,
money
yeah. But
regardless.
that's like I said, it's like basically like options. Like if people that
Yeah,
are trading options are very accustomed to like having to pay per day that they're not making money or hasn't reached a strike price. I don't know if you know how options work, but
kind of. I've never done it, but kind of know how.
yeah, I
Yeah,
really don't recommend it. Like you have to learn about. Oh, that's actually something that I wanted to talk about here. The accessibility, the use, the ease of use. Like with options, like you need to know. First of all, that's one of the things that I wanted. The is it worth it is a pretty open-ended question because that's something it's like kind of answers everything that question is being answered here. So I don't even know why I put that there to be honest. But like why should I trade Forex? What are the advantages? Right. That's the next question, which is what I'm about to answer. You don't have the PDT rule, which is number one. You can open a $100 like margin account with any broker, okay? Because most of them let you deposit $1 is the minimum deposit, like straight up, and you can trade with leverage, a 500 to 1 leverage. You can control with $100 like what is that, like 500,000 units of currency. It's insane. Like straight up you
yeah.
can like make like crazy money with or actually no, that would be 50,000, sorry, or no, yeah, 50,000, my bad. 100 times 500 is 50,000. But in any case, yeah, that's it's still pretty good. If you're putting in $10,000, 500 to 1, you can control up to 5 million units, which is
Not a good
really
idea.
good. Like I have a $10,000 account right now, and that's like what I'm using only 50 to 1 leverage. But if you're using 500, you can trade like way bigger lot sizes, and you can make a lot more money in a day. Like you can trade like you can make $2,000 in one day, like easily in the sense that if it goes in a direction, I mean, obviously. And that's also what I'm talking about here. Is it profitable? Yeah, if you're doing a 1.5 to 1 risk reward, which sounds like nothing, but you're risking 1% of your account, you're making 1.5%. In stocks, 1.5 is 150%. There's moves that are 150%, 200% all the time in Forex, where you can double your money in like 20 minutes. Like it depends if you're scalping. Like straight up, I've had moves like that. Like this move here, which I'm gonna go over in a second. Like we're gonna talk about that, don't worry. And earlier I was talking about options. I did study options. For those of you who are coming from the big group from PTG, I had a class with Evan, okay, and he explained to me all about options, and I'm like, why would I do this? Like you're basically betting on the fact that it might be reaching the strike price, and if it doesn't reach the strike price, then you can sell before. Okay, but you're basically paying every day that you're losing, that you haven't made money on. So you're losing money, you're paying the premium. So you have to get the strike price or close to it to break even and make profit. And I'm not saying that it's a terrible thing, and I'm not trying to shit on stocks. Like I'm not shitting on stocks at all. Stocks are a good method, but just it depends on what you're looking for. Like you have to learn all about the Greeks, you have to learn about implied volatility, you have to learn about um strategies of basically like of of the options, like covered calls, debit spreads, like iron condor, jade lizards, like all these different short strangle, short straddle, like all these different like option strategies that are like what, like why do I have to know all these things? Like this, I'm telling you, it is so complicated. Like this is so much easier in that regard, in my opinion. Again, I'm saying that because I don't know everything about options, but I tried learning from Austin and I tried learning from all these people, and it's like Like I have, wow, like I honestly, like this is so much easier. Like, is it going up or is it going down? Okay, is it going down? I'm gonna short. Oh, should I go long here? Is it gonna go up? Okay, I'm gonna buy. Like that's straight up how Forex works. It's just a lot easier and you can make the same money and more and stocks. That's why I really believe in Forex a lot in that regard. Um, just the ease of understanding. It's just like, I don't think I'm a genius. I think I'm smart, but I don't think I'm a genius. And for me to understand something to the level that I do in this market is pretty nice. And honestly, in stocks, like I honestly tried learning stocks. I couldn't learn it. Like I really could not. So if you guys are struggling with that, then I really recommend for you guys to join this group. And not because like not because I'm trying to advertise here. Like I'm honestly just trying to help you guys like understand what is happening, in this market. And I hope this would make sense to you, like what I'm saying. Um, and exactly how much you need to start off with. That's what something I was kind of talking about earlier. It depends on your how much you want to start off with. Some people, when they first start off with like $700. It's $800. Like they start with a small account. They grow it. They make 5% like in a week, and they keep growing. They grow and grow and grow. And they're like, you know what? I'm making a lot of money with this. I'll put in $10,000. I'm gonna start making more money. They put in 10K, start making a lot of money. Um, so yeah, that's something that you should definitely consider. In terms of your position, like your financial position. I mean, like how much should I afford? How much can I afford to put down for this? Like that I can afford to lose. That's something that you need to talk to maybe a financial advisor, maybe yourself, figure that out and go from there. And you can always ask me or anyone in the group if like what they think in terms of that. But obviously, I would help you. But that's something that you need to figure out. Um, so I mentioned leverage. So maybe someone's asking, wait, what's leverage? So I'm just gonna go over that pretty briefly. Again, guys, I know that I said this already 3 times, but I'm really not gonna spend so much time explaining all these things because it's just so unnecessary for me to do the work twice. And I really posted a video explaining everything already. So if you're new to this, please um keep watching and also go back and watch the other video because that would just like boom, like just explain everything, set everything straight for you. So again, briefly going over leverage. Let's say you have $20,000 and you want to buy a house for 100, and you ask the bank for a loan, right? And that's what mortgage is, right? You pay back the loan. So you put down 20K, and then the bank gives you 80K, and then you get $100,000 to buy the house, right? Pretty basic. So the 80K is the leverage. So they're giving you the necessary like payment to get to 100K so you can afford to buy the house. And that's what's happening in Forex. You're getting 50-to-1 leverage, right? So let's say you have a $10,000 account like me and using 50-to-1 leverage. So that gives you 500,000 units of currency, okay? And you only had to put $10,000, which is also, by the way, your margin. So usually, depending on your stop loss size, okay, how much you're risking, and where your stop loss is, the amount of risk that you're putting on the market. Let's say you're risking 20 pips, that changes the amount of margin you need to put. So what that means is that your broker will hold a specific amount of your own money that you can't start going around and trade all of their money away. So let's say you open a position for okay, GJ is 5%, okay, depending on your account size. So sometimes I open a position and it's like $6,000 margin, like they're holding the margin that you need to put in. So you're not risking all the 10,000, but you're risking $5,000. But whether the trade goes in your favor or against your favor, that $5,000 that they're holding will go back to your account no matter what. So the margin that is being taken out of your account to open the trade is never lost. It's just being held temporarily so that you can afford that position. I can go over that more, but that's basically in regards to that, how that works. And then if you're using risk management, which we're about to go over, how to manage your risk, then you're not going to be blowing your account with margin because that's noob mistakes. That's the people that like people in Nigeria trading Forex, that's what they do. They just blow their account in like a day. There's so many videos of that happening. I feel bad for laughing, but Yeah, it's bad. Like he's like 500 to one leverage, and they risk the entire account on one trade, and then they lose, and then they blow their account. And depending on your broker, you can actually end up owing the broker money, which is something that we're not going to talk about because that's we're not even going to get to that level of risk and gambling. So I don't even want to talk to you about that, like about margin calls and all that stuff. Like, I'll let you know what that is, but I'm not gonna like we're not teaching that. We're not Wall Street bets here. I'm not gonna teach you how to risk and gamble away all your earnings. Like that's not what I'm doing here at all. Yeah, actually, Nikolai was just talking about that too on Volatility Times. Basically, like what he was just saying too earlier. New York session, London session, New York, London overlap, the best times to trade by far. So like, I wake up at 6:30 for the pre-New York, and then you get like the big moves. Like Nikolai said earlier, like from 8 to around 11, 12 is like really like that's when the markets are moving. That's when the banks are filling in orders. That's when like that's when shit is real. Like that's when you make like 20, 30 pip candles, like volatility. And also they have the news like Powell talks, this dude, FOMC reports, NFP, non-farm payrolls, fucking volatility. Talk about volatility. We're gonna talk about NFP, but that's again in a later video. We're not gonna talk about news events right now. At this current point, but actually we will talk about that. I should have added. Oh well, actually that is one of the questions. We'll move to stock market. So pips. I think in stocks it's called ticks. I'm not too sure, but like how you have like 150 and then it moves up to 160. Like the price moved up 10 ticks. I think I don't even know. Like it moves up 10 cents.
A tick is like a cent, right?
Yeah, I think so. I think it's called ticks. Like their pips are called ticks. I think.
Well, in Forex, one tick is actually a tenth of a pip.
Right. No, I know, but I'm saying like I don't know what their measurement is called because they don't use pips like that.
For the stock market?
Yeah, like no, I'm doing an integration. Like let's say you're coming from the stock market, now you want to go into Forex. Like I'm just trying to convert them, not really explain like what pips are. Because they know how to trade, they just want to like I think it's called ticks, right? It's what is it called in stocks?
Yeah, I believe they call it ticks, but in Forex it's also called ticks, but
I've never heard anyone call it a tick.
No, in Forex a tick is like a tenth of a pip. So normally you'd use pips because ticks, like you don't really count those because they're
Isn't that a pipette?
Or
Like
that too, I think.
It's called a pipette, yeah. Like a fraction, like the fractional pip, like the little floating. That's
Yeah,
so irrelevant. I don't even want to talk about that.
In trading view though, like in trading view, they're called ticks, but you don't usually use that term.
Yeah. I mean, I know them as pipettes or like fractional pips, but that's so like irrelevant. Like, I don't even want to talk about that.
Yeah.
I don't want to know
this is true though. Yeah, don't think about.
I don't even waste my time on that. Like, if you really want to learn about it, look up pipette. What is a pipette on Investopedia and read about it because it's just such a. It's not even measured into my trade. Like, I don't even like. Ugh. Anyways, okay, pips are basically how we increment the market. So, let's say, oh wow, okay, I talked about this in the previous video that I mentioned right here. If you really want the full explanation, right? So go back and watch that. But basically, pips are one. Wow, I forgot that it's 4 decimal places on any other pair, and any pair other than JPY pairs. It's 4 decimal places. So let's say you have €1 is equal to let's say the common denomination of the dollar to euro is 1.5. So you have €1 equal to 1.5000. So 3 zeros, 1.5. Okay, 500. Actually, let me write this down for 1 second. That's just to make it 1, 2. 1.500. Wait, yeah, okay, there we go. So let's say, wait, no, yeah, okay. So let's say, just making sure. So let's say that we have a move of something like this, 001. So this tiny increment, this is like a tenth of a cent or something. Like this is like nothing. Yeah, this is like 1 cent here, and this is like a tenth of a cent. Like it's like such a small fraction of a move.
I believe it's a hundredth of a penny.
Is it?
Cause,
Oh yeah,
cause,
you're right. Yeah, yeah, yeah. My
yeah.
bad, bro. Fucking yeah. My math is
So you
bad,
can
man.
either think about it as four decimal places
Hmm.
or four movement. How do you say it? Up
What?
to four zeros after the or four
Yeah, four
increments
decimal
after the
places. Yeah,
decimal. Yeah,
yeah, like
four. So
this.
it's either four decimal places or a hundredth of a penny. So you can
You're
think
right,
of it
right.
either way.
Damn,
Except
Nikolai
yeah,
with the fixes.
except for the Japanese yen, it's only two
Right, right. It's
decimal.
two. It's well, it's one and then two decimal places after. But that
Because yeah,
I'm gonna talk about that. I'm gonna talk
because
about
their
that. But
currency is like so inflated that it's like
yeah, yeah, yeah. It's bad.
but
But
yeah.
man, Japanese yen is like I love Japanese yen. I love trading that there. Anyways, man, you should come in my classes more often. I could use you like to fix my shit, like be like fucking fix my mistakes and shit. Spell check. In any case, yeah, he was right. 100% right. I was wrong. Don't listen to what I just said. What he just said was 100% true. So let's say we got to move like this of 1 pip. So that's basically what it is. So same example, 10 pips, right? 100 pips, 1,000 pips. But there's no way I'm gonna catch 1,000 pips, bro. That's fucking crazy. Like nobody catches 1,000 pips.
You could though, like cause
Yeah, you could, but
the
like, come on, bro. Like a
like in
thousand pips, like,
March when the
when it
US
dropped, yeah,
dollar, like
maybe.
when the US dollar went to the moon, like that was if you entered then you would have caught 1,000 pips.
Oh,
But that's
easily,
like
bro. Yeah.
but you don't get a like a
No,
global
usually no.
pandemic every
You can get
year.
like 100, 200 move, like maybe like a couple, like a
Yeah.
day. Like it depends also on the volatility. Actually, depends on like if you have like NFP, you can catch 100 pips in 1 second. Like
Or on
NFP is crazy.
or gold, which is like 10 times more volatile.
Oh, gold is man. I made a lot of money on gold. I like
Oh,
gold.
same.
Gold is so easy. It's like up or down, down, boom, crashes it, up, boom, what's up? Like like, just find the direction and that's it. Like you're just fucking golden at that point. Oh, literally golden.
Yeah.
Literally. Gold is gold, yo. If you understand how to trade gold, like you're gold. If that makes sense. But okay, wow. And then pips on gold is like a totally different thing. It's like it doesn't work like this. It doesn't work like that. This is only for currencies. What I'm teaching you here. Gold does not work like that. Gold is like
It is the main it is the currency that the central banks use to trade
right,
with
yeah,
each
for
other,
sure.
right?
But like the pips don't work the same way. Like
Yeah, it's like
you're actually looking at the actual numbers, like 1726 or 1730. Like you went up 40 pips, like you know.
yeah, it's 10 times more volatile. So if you want to be more accurate, like I'll measure the pips in gold like a tenth
Yeah,
of
like gold is like, I
what
mean, it's not really a currency. I mean, okay, Forex traders trade gold. Some people trade also US 30. I don't like trading US 30. It's just like, I don't like it. But a lot of people
okay,
do.
that's crazy. If you're new, like don't trade
No,
US
no, no,
30.
no, no, no. I don't like trading US 30. So once you get into the space, you realize, wait a minute. So Forex isn't just Forex. Like, who would have thought, right? But yeah, we don't just trade. Forex, like we basically dominate like gold, the area. Like I don't really know any stock traders that like actively trade gold like for a living. Like I don't know anyone that does that. In the stock group, no one does that actually. I mean, there's gold futures. Like I know Austin does futures and stuff, but yeah, futures is a whole different market. Like this is not. I mean, they're both CFDs, but yeah, this isn't the futures market. It's like actual price of gold. But yeah, we're still talking about gold for a second. Let's just talk about this. So basically, that's how the pips work. And so, just for example, let's say you're going to France, $10,000, okay, and you no $15,000, okay, and you give them the 15,000, and they give you back like 10,000, right? Because 15,000 is equal to 10,000 euro at this price. So let's say that the euro goes up in value, and this is what you see. Okay, so when you get your money back, you actually would get back $500 because it went up from 1.5000 to 1.55. It moved up by 500 pips, right? But in value, when you return it after the 3 weeks that you were, let's say that you were in traveling in France. So when you come back to exchange your money to go back to the States, you would have actually made money, and that's how it works. That's literally how we make money. We're trading off of the exchange rate. You understand? And we understand the exchange rate between currencies. So whatever the price is quoted at, we buy in, and then we either expect a sell or a buy. So if we're selling the market, we're basically shorting. We're owning position of the market for the limited time. It's going down. Let's say we bought in at 15000 and it moves down to 14000. Okay, 4000 move. So I'm down by 1,000 pips, right? This is a theoretical example. I'm not saying you're gonna catch something like this, but let's say you caught 1,000 pip down move. So you were to sell at 15000. You're borrowing shares from the broker, and then at 14000, you sell them. Or no, technically you buy them at that price, and then you shorting the shares from the broker, and then that basically like you're giving the broker back the shares at a lower price, so the broker actually ends up owing you money because you're like partially owning that position from the broker. You agree to exchange at that price with the broker, and then you're basically holding on to the broker's shares. So that's why shorting is dangerous, because of the institutional money flow, which is basically how the market moves. The broker is never going to lose money. So the second that you realize that you're trading against the banks and the brokerages, the money makers, like the money movers, basically, or sorry, the market, the market movers is what it's called. The second you realize that, then your trading changes, and that's what we're going to go over in right now, because that's basically what moves the market. The money, like smart money traders, like the banks, institutions, news, NFP, right? Non-farm payrolls is a huge event. FOMC reports, CPIs, your consumer price index, unemployment rates. These are negative things that, inflation, all the Powell speeches, right? Current evaluation of the dollar, like that's stuff that's moving the market. Japan had an earthquake, like I think a month and a half ago. That really like brought up pound yen, because the yen was weak. When the quote currency, right, which we explained, base quote, when the quote currency is weak, it drives up the other market, so it brings up GJ, because pound goes up, which brings up GJ, because now you need more pound to exchange. You need less pound to exchange for yen. So the prices of GJ would rise to meet that, like the equilibrium that's established, that missing zone, because now the yen is weak, so the yen would rise in the charts, not in value. The yen decreased in value, and now then you say, okay, so now I understand these things. So now how do I implement them? You start looking at the news, fundamental analysis. You say, okay, let's say you're only exclusively trading pound yen, okay, which is what I do at the moment. But I'm gonna start trading GU also, pound dollar. But like I said, let's say you're trading GJ. You start looking at England's okay, right now Bank of England last week released interest rate reports saying that they're not changing interest rates. So that's basically not really affecting the pound side of things. The pound is being affected by coronavirus, having lockdowns, fresh new lockdowns in the UK. They're talking about that. And the UK is kind of in a declining market, so like that's kind of also affecting GJ rates. But then you have the pound yen, which is severely getting impacted right now from all these different economic events from the Bank of Japan. They're doing quantitative easing right now. They're injecting like 2 trillion yen into their banks, which is not really good, which is why we've seen kind of an increase, but also we've been having a lot of fall recently. And you can look at that actually. Let me show you. We can go look at that here. Or sorry, here. We've actually been seeing what is this? So this is what you guys do. You literally go to Forex Factory. Look at this, guys. It's literally, where do you go? You go to you go right here to economic calendar. Okay, you don't even have to look it up. You go and click on this link right here. You go here, and you just look at the news. Japan is preparing 300 billion yen initiative to assist local tourism. Okay, so what does this mean? This means that this is, we're not, wait, okay. I actually didn't read this news today. I didn't trade today. Friday, I don't have to trade on Friday. So this is actually not to resume travel. So this is actually, not good news. Which, what happens? What does that mean? Let's go back to our market. So if it's not good news, right? I mean, for Japan, it's not good news. What does that mean? Anyone? It's gonna go up. And what happened? It went up.
When was the news released?
This one was released at 8 p.m. yesterday in the Asian session, which shot up prices.
Wait,
8 p.m. Eastern Standard Time.
eight.
Look on the screen. It wasn't a major news event, but that's just something to like to consider about the Japanese economy. Like that's just how did you use the news, you know,
It's
like
20.
to,
It's 20.
to
Yeah,
trade.
it's 20.
Oh,
Okay.
then you had retail sales. Let's see how those were. We're only with an increase of okay. So you actually had an increase, which is good. That's actually good for the pound. And sales were still down by 3.7. Okay, so it's not so the pound's on a little bit of a recovery, but it's still kind of still climbing to get back to the sales percentage that it
Was that
was.
also at the same time yesterday?
This was at 3 a.m. This was in the London session of today.
Oh, and since then it's just been going up, huh?
And then also for China to impose anti-dumping. Okay, that's not relevant. Oh, Bank of Japan, the Bank of Japan will buy ETFs. Okay, I'm actually gonna like look at all this stuff right now because you can just do that on your own time. But um, that's just showing you like how you basically like you just like you don't have to be an economic god to understand these things. You say, wait a second, if tourism is not gonna work because of the coronavirus, obviously that means that the yen is weak, right? Because that's a bad news impacting the currency. So what's gonna happen? That's pretty basic. So it doesn't necessarily mean that it would always go up. Sometimes the news doesn't matter. Like it's not relevant. Just because Force Factory posted doesn't mean that's going to move the market. But sometimes you just take that it's as a confluence. You say, wait a second, prices broke out of this resistance. It broke out of the consolidation. It has a bullish engulfing candle, right? I'm just giving you an example. And you have this news. I'm fucking going long, boys. Buy position, and it goes up, right? Like, just an example. Like that's just how you use a confluence of news. And if you're not going to use the news in your trading, best of luck to you. I expect you to blow your account in like maybe 2 weeks. Like straight up.
I've actually never used. I did blow my first deposit, but that's because I was upset and decided to just.
Revenge trading?
No, no,
Oh
not even a
yeah.
revenge. I just had a. I just had a. What was it the previous day? Like I had a missed opportunity. I would have made like 10 times my risk in one trade, but during the New York session. But then I was like really tired and decided to take a nap, and then
That happens to me
then
all the
like
time.
and then all my criteria lined up perfectly, and I had a perfect like 1 to 10 risk reward trade.
Damn.
And then I woke up to that. I'm like, well, shit.
I wish I'd taken it.
And then and then the rest of the day I ended up like IRL like just had a really bad day. And the next morning I woke up feeling like crap, and then
Oh
ended
man.
up basically taking a really bad position, but
Wait,
lost.
you're in Canada, by the way? Just
Yeah,
ask this one.
yeah,
Yeah,
I'm in
I can tell.
Canada.
What, Toronto?
Uh,
Ontario?
no, Quebec, but hopefully not for
Oh.
too long.
You don't
Moving
speak
out
French, do you?
soon.
You're
No,
Russian.
I was. What about Gadaski?
Oh man, I'm Russian too, but I don't speak Russian. I'm also
Oh,
Russian though.
nice.
Yeah, I wish I speak. I wish I spoke Russian, bro. All
No,
my
I speak
family is like,
Bulgarian.
"Пиздец, долбоёб, блядь," and I'm like, "Fuck, I wish I knew what you were saying."
Yeah,
Anyway, so yeah, that's basically what's moving them. I mean, you should know about like news, like you should understand what's happening. Like, you don't need the news because
yeah,
some people say, oh, like so there's a big argument between technical and fundamentals. Some people are complete fundamentalists and they say, oh, we don't need technical. All we need to know is what's going on with the currents. And it's not that it's wrong, but the best thing is to have a healthy balance of both. I'm not saying you should only trade strictly one side, but you should definitely know what's happening with the country because that's going to add you awareness of where the market's heading. Because at the end of the day, that is what moves the market.
I
Because like it's the bank,
guess.
like on small moves and stuff, when there's nothing really affecting it, it's liquidity. It's where the bank's going to take you out. The bank's trading against you. It's not like
Yeah,
stocks. The bank's trying to
yeah,
take you out. Like
yeah.
ICT explains everything. And here, I'm
Yeah,
gonna
I
show you
know.
an
I
example.
learned that while practicing on my demo account early
And
on.
that's
So
and that the second you realize that, that's what changed the game for me. You're playing a chess
yeah,
match. You're playing a chess match, and you have to be 3 steps out of the market.
yeah.
And I don't know about you, but you probably like chess. I'm guessing. I love chess.
I used to play a lot of chess. Kind of got back into it because quarantine.
Yeah.
Um,
You have Chess Time Live?
Huh?
You have Chess Time Live? The app?
Chess.com.
No, listen to me. I played on every single platform. Chess Time Live is the best one.
Chess Time Live. Okay, I'll look into it.
Add me, bro. We'll play if you
Sure,
want.
let's do it after.
Bro, so PM you after. But
Yeah.
I actually will, don't worry. But yeah, dude, I fucking love chess. And the second that you start realizing, wait a second, this market is exactly like chess. Like I play chess, I've been playing chess for like I think since I was in 6th grade. So like 12, 13, I've been playing
Wow.
chess. And like I think like 6 steps ahead, and I'm playing against someone and I'm like, wait a second, like that's what the market's doing. Like I'm playing against the market. And the second you start realizing how the market moves, that's when you start becoming profitable. The second that you lose, you're like, why am I losing? Like, what the hell? Like, it broke the resistance. It's going up. You had a break and retest. Why isn't it going up? Let's go over that right here. Yes, this was cherry picked. Yes, this was a winning trade. Yes, hindsight, whatever. Fuck you. Okay, I still did this live. I called it out live in the Discord. I posted the video. So
Oh,
fuck everyone that says
you
it was
took this
hindsight trade.
trade?
Yes, I called this trade out live on the live stream. And so anyone can say, oh, it was a hindsight trade. You can go, I don't even know, leave the fucking chat because I don't even want you in my room if you're gonna say it's a hindsight trade. I literally called it out live, so I don't even want to hear anything about
Hey,
that.
so that's my birthday, March 24th.
Oh, really? Damn, happy birthday.
Thank you.
Damn, I didn't even know, man. Mazel tov, mazel tov. Anyways, so let's break this down very quickly just to go over my strategy and why I need to know the retail tricks, like all the Fibonacci and all that crap. Why I need to know this bullshit so that you can trade against them, and that's how you're gonna make money. So
Yeah.
you had price coming down here on the 30-minute time frame. I was actually trading on the 15-minute. I was looking at the 1 hour using 4 hour zones and stuff to plan out my trade. You had a pretty big 4 hour resistance here, and as you guys can see, it actually support came down. It tested this area here, all this could not break down. So people that had sell orders up here got stopped out because the price rejected. I don't know why you would sell it right here. You had a huge resistance here. Some stupid. Anyways, but price, you had a liquidity pool right here, right? Actually, I think I can draw on here. Oh, there we go. Okay, perfect. So we had a pretty big area here of liquidity, right? Because people were probably using this candle up here as like the sell stop, like the sell. Well, wait a second. Stop loss orders. Sorry, stop loss orders above in here in this area. So price came back and retested. It stopped everyone out up here. And then what happened? People were buying this market. Oh, it broke above this high, so now I have to go up, right? Retail fucking retards came up. Boom, stop out, move down. Everyone here got stopped out because they probably use this as like a. They probably use this candle as a stop loss. So this stopped them out. And then you had this little consolidation. Price broke out. You could have. I actually did call this move here. I called this move that it was gonna retest but not break above. But I did call this move, but it was inside of a range. I didn't want to take it. Again, like I said, you don't have to believe me. You can literally go back and watch the video for yourself. Like I don't owe you anything. Like honestly, I really don't. And I really did break everything down. I'm just going over the trade at this point. So I don't want to hear anything about hindsight because I've been called a hindsight trader. You can go fuck off. Sorry. Not you. Like I mean anyone
Yeah,
that's
I know.
yeah. So I didn't take this trade, even though I did call it out. I knew that it was gonna happen, but I said I'd not because the market was going down. People were selling here probably because you had this big move down. So I was like, it's probably gonna go and retest up to this area, like of this resistance. So it did, but then it didn't break above. So I'm like, okay, obviously I'm looking for buys because it's not breaking above. It's actually going down. So I said, okay, basically, here's what I pointed out. You had an A, B, C kind of formation here in terms of like lower highs. You had like one lower high, a higher high, and then a higher high. So I said, okay, if price is not going above this resistance and we're going down, so this is the C point of the high structure of the higher high structure. So if we're gonna break the C point, that's not enough conviction for me. But if we break the B point, which is the middle, it's like a stair step pattern. It's like a 1, 2, 3. If we're breaking above the second, if we're breaking below, sorry, the third stair, we're still above the B square, right? Stair, sorry, the B stair. So we're not confirmed downtrend. So you can still sell, but because you're after the resistance but the price can go back up and break. You never know. You want to have confirmations. That's something that I learned the hard way. You want to have confirmations that you're definitely going down. And that depends on how you trade. That depends on how much risk tolerant you are. I'm very conservative. I'm a Jew, so I'm very capital preserving. I don't want to lose my money like that. So I want to be very preserving of my capital. So when I saw that we're testing this level, I said, wait a second. If we're breaking below B, we're going down because we broke structure and we're moving down. And people are buying at this level here, probably thinking that's gonna break above. It's like a retest because we're still up here. I don't know. Like, so maybe like there's sell orders down here that haven't been filled because people maybe like, I don't know. I mean, at that point, it wasn't really liquidity. It was more of like it's just a structure, market structure, using it to my advantage. And we did break B. So if we're breaking B, then we're going down. I said, okay. So my opinion is, and like I said, called out on the live stream, if we're gonna break B, then I expect to see a move at least up to this point, because at that point, that's where the market rejected, and that's the top of this zone that I labeled. So I'm gonna at least go for the top of the zone. That's how I trade. I go for the top of the zone, because then you never know if it's gonna reverse on you in the middle. So you skim off the top, and that's it. Because that's just like that's just like because you don't know what's gonna happen. Yeah, look what happened. And if I had gone for more, it wouldn't have happened. And look what perfectly executed. And that's what I've noticed that happens a lot in the market. It goes to the top, and then so I go for the top I skim the top off of the zone, and that's it. I'm not greedy. Do you understand? And this was a 2.5% move, by the way. Pretty nice.
So over 1 to 2.
Yeah, this was a 1 to 2.5.
Okay,
risk
nice,
reward.
nice.
Yeah. So I'm saying obviously it was a 2.5 because I'm risking 1%, so it was a 2.5% gain to that account. In terms of percentage wise. But yeah, this is a 2 to 5 to 1. I mean, honestly, like this was a textbook perfect, like like it was just perfect. Like there was nothing wrong with this trade at all. Perfect, flawless execution. Like honestly, I couldn't have seen a better entry, because you could have been like, wait a second, why not enter? You had to resist, you had to break up the resistance, you had to move down, confirm move down. Right, but we're still above B. So I mean, you could have technically in hindsight could have said you should have entered up there. Yeah, okay, but you don't know what's gonna happen. But if you're getting a confirmation, you're getting a confirmed move down, then that's something else. So you want to have you want to identify the levels that you want to take the trade on based off of market structure, based off of liquidity. And the second you start playing against the market, you start thinking 3-4 steps ahead, that's when you start earning. And I'm sure Nikolai can tell you the same thing. I'm sure I doesn't trade the same way as me, maybe, but I'm sure he uses some sort of like strategy that he's tested, that he knows, that he thinks that he's the steps ahead of the market. Because if you're not going to think steps ahead of the market, then I don't know to tell you.
A
You
lot
have to
of
think.
back testing.
A lot of back testing. Yeah, for sure.
If you wanna improve quickly, like get a good back testing. Do you have? I mean, I just use TradingView, a replay mode.
Oh, you bought TradingView? I didn't buy it.
Yeah, I got. It was like a Black Friday discount. It was
you got it.
It was like $130 for like over a year.
Yeah, that's
membership.
good.
So I'm like,
the
give me
replay
that.
tool is good, but software effects is really good too, because you can back test and simulation.
Yeah, that too. That's another one I was considering, but
yeah, but I'm probably gonna buy TradingView and just you can do the replay mode. That's really that back testing like significantly increases like your profitability. Like you have to put in the work, and most retail traders, they just want to find some golden strategy and adopt it, and then cross over 200 EMA, 550 EMA. At that point, you're fucking algo. You're not thinking. You're just using a rules that you've established. You're an algorithm. You're not actually your robot. Why not just buy a robot? I like to think about what I'm doing. I like to see what price is doing. I don't want to use trend lines and all this crap that's not going to work, because it doesn't, like, the market doesn't have to respect the trend lines. You know what I mean? The market respects whatever it wants. It's not that the market is never wrong. You're wrong. You have to adjust your mindset. Like, this isn't because it's out of resistance and it's going to go down. No.
Yeah.
In this case, yes, but like it doesn't mean that it's going to go down. Like it can easily, in the same second, come down here, break below B, right? And then shoot back up. Like, and it happens. Like, you're like, wait, what? But it went down. It didn't break the resistance, but it moved down, and it had all this bullish pressure, like bearish pressure. Like, why didn't it go down? Probability wasn't in your favor. Nothing you can do about that. Sometimes you just take losses and you're like, there's nothing I can learn from this loss. Like, There's literally nothing I can learn from this loss because there's nothing that I did wrong. And that is something you have to understand because sometimes your strategy is 70% accurate, right? It's 80% accurate. There's still the 30, 20% time that you're not going to be accurate. And that's just something you need to accept. You can maybe see how you could have avoid the loss, but you need to always stick to your trading plan and always stick to the things that you know and test them and thoroughly, journal your trades, write down notes, learn from the session, go back every day and look at the session, how you could have entered the trade, where you could have taken profits, where you could have put your stop loss. If it was a losing trade, look at the losers and say, how could I have avoided this loss? How could I have mitigated my risk at that point? How could I have managed my risk so I wouldn't have taken the full loss of my account? Like, let's say you were risking 5%, let's say 5% is $500 for you. You don't have to lose the whole $500 if you're losing. You can mitigate the risk, sell positions at certain levels, like stair step them, and you end up losing 120, 130. So you're not even losing the whole amount. Capital preservation is key in this game. So you need to know how to preserve your capital. You need to know how to, actually take profits, and learn about all these things. And that's how you become profitable in this game. And yeah, I mean, that's basically there wasn't so many slides, but that's just basically like the things that I wanted you guys to know for this video. And like I said, I think this is the 4th, 5th time now. Please go back and watch the masterclass archives. I talk about, nobody watched my psychology video. I only got 4 views. And that's such a shame because like psychology is the most important thing about trading, not even your strategy. And I go over that 100%, in detail. And it's just it's just a shame. And if you're watching this right now, really, if you're really serious about your education, I learned all this stuff. It took me almost a year to learn everything. Go watch the video. Go watch these videos. The free education, everything's compiled in such a beautiful way that it's just as a beginner, you just understand so easily. I really put in the work for you guys, So honestly, guys, go back and watch it, and I hope you guys learned something from today. So I'm actually gonna end the video here. Let's just, yeah, I hope you guys enjoyed it, and have a happy holiday for the Jews out there, and for everyone else, have a good weekend. So let me end it.